Okay, so big news in the investment world. General Electric said it would split into 3 publicly traded companies, breaking apart the more than century-old company that was once a symbol of American manufacturing might and has struggled in recent years. In fact, I read a book by Jack Welch. It's an incredible book. I highly, highly recommend it. Now, this plan is being unveiled 3 years after Larry Culp took over the troubled company and tried to stabilize its operations by selling off business units and paying down the company's debt load. See, there's debt. I hate debt, and I hate it with companies, and I'd never, ever had debt with this company. I just don't believe in it. This long-term debt, it's a company killer. But GE's stock price, despite a 1-for-8 reverse split, has lagged behind the S&P 500 and its rivals. The move is the culmination of a years-long process of shrinking the company, and GE has already sold off its locomotive and home appliances business. It spun off its oil and gas business operations, and the GE board began to consider the plan in the spring. Mr. Culp said, as efforts to cut GE's debt and improve operations had progressed through to consider such a move. He said, we looked at this and other operations. It was clear it was the right path for GE. GE said it is spinning off GE Healthcare, which makes MRIs and other hospital equipment. In fact, for a while, I was in the x-ray business, and a lot of these hospitals we tried to call and already had contracts with GE. They really had a lock in it, so we really couldn't get in. And then early 2023, when GE was expecting to retain a stake of 19.9% that it plans to sell over time. So it's going to retain part of that business, but it's going to sell it off bit by bit. In 2020, the unit had about $17 billion in revenue. So GE plans to combine its power unit and renewable energy, which makes turbines for power plants and wind farms. So that may be a big part of the infrastructure plan. Watch the last video we just did on this, respectively, and spin off that operation in early 2024. Now, the company's remaining digital division will also be moved into the power business. Now, these units together had about $33 billion in revenue in 2020. Now, that would leave behind a GE focused on making and servicing jet engines. The unit, a key supplier to Boeing Company, has been hit hard by the pandemic and had about $22 billion in revenue in 2020. The stock price, adjusting for the split, is little changed from where it was when Mr. Culp took over in October of 2018. Now compare that with a roughly 60% gain in the S&P 500 index. Existing GE shareholders will get new shares of the 2 companies after they're spun off. And in some ways, GE is following through on a plan that was being discussed by GE directors when Mr. Culp was first appointed to the CEO job. And at that time, GE's board planned on spinning off the healthcare business as an initial public offering, but Mr. Culp put those plans on hold. He said, and I quote, it was not necessarily a time for grand plans, he said, referring to when he took the CEO job. We needed to get the balance sheet squared away and get back to basics operationally. Now, Mr. Culp, which is the first outsider to run GE, has been slashing corporate jobs, shrinking the headquarters staff, and pushing more of those roles to the individual business units. Mr. Culp also worked to simplify GE's production and eliminate waste in supply chains using a lean manufacturing strategy that he used at Danner Corp. The company's profit margins have improved, and it's back on track to generate more than $7 billion of free cash flow in 2023. Now, the breakup will revive the debate among investors about the ideal structure for a manufacturing company. And of course, China just kills us in manufacturing. So for decades, GE's leaders has said that there's been a diverse mix of business in different parts of the world that helped the company weather the ups and downs in different markets. But it also caused an internal bureaucracy that some investors and former executives said made the company inefficient, complex, and very difficult to manage. Now, Trian Fund Management, an activist investors whose partner Ed Garden sits on GE's board, said it was a welcomed split. The strategic rationale is clear. 3 well-capitalized, industry-leading public companies, each with deeper operational focus and accountability, greater strategic flexibility, and tailored capital allocation decisions, he said in a statement. In his conversations with investors and customers, Mr. Culp said there was a clear calling for us to move in the right direction and that particular direction. Separating the business increases the focus on accountability for management and the board, and he said, citing decades of examples outside GE. He says, and I quote, "A healthcare investor wants to invest in healthcare, expecting investors who don't own GE today will reconsider. We know we are under-owned in each of these three sectors, in part because of our structure. GE is following a similar strategy to German rival Siemens AG, which spun off its healthcare business in 2018 and then spun off its energy business in 2020. Both Siemens units compete with GE divisions. Now, rival Honeywell International Inc. has spun off some of its smaller operations, but has remained a more diversified manufacturer. Honeywell now sports a market cap of $155 billion compared to GE's $120 billion. So Honeywell's a bigger company. Mr. Culp will continue to serve as chairman and CEO of GE until the second spinoff, at which point he will lead the aviation-focused business, GE said. Meanwhile, the executives currently slated to run GE's units will remain at their roles. Peter Arundi, who recently joined GE to run healthcare, will take over as the unit's CEO starting January 1st. And then GE veteran Scott Strazik will continue as CEO of Power and oversee the renewables division, while John Slattery will continue running aviation after joining GE last year. So that's an update on the GE split. So go ahead and please click like, share this video with others, and subscribe if you're new. I appreciate you watching. Hope you found this helpful. This is The Business Guy.